Portfolio Builder members, welcome to today's trade alert. We're basically flat this week. We had a record-breaking period of gains as the S&P 500 climbed up a wall of worry. And now we're becoming a little bit skeptical that it can break into new highs because I think tariffs will rise and that U.S.-China trade deal does not come to any sort of agreement anytime soon. So in general, our portfolio has just been flat. We went from 7.77 yesterday to 7.78 today, tiny gain. The S&P 500 is down 1% during this same period, and we're flat. So we were able to protect against the downside. And if we'd gone any further, this put option would have rocketed up in value. Yesterday, when we had a little bit of a sell-off, this position was up 40%. Which was our long put option. And so we'll be taking the profits from our covered call and putting a portion of it into leveraged put options until we get more clarity on the U.S. trade war. So let's just look at the trade. First step is, of course, to have 100 shares of the SPY. Now, if you followed our previous trade alert, you need to close out your covered call by buying to close the June 12, 2019 287 call option. So we did generate a profit on that from yesterday. So if I do look at yesterday's credit, we took in $1.86 and we're buying it back for $1.38. So that's a good profit on that covered call, and it did its job to give us a little extra cushion against the very well-known downside risk ahead. Next, we need to sell to open the June 14th 288 call option. So that's about 22 cents below the current trading price for a credit of $1.48. What's important are the strike prices, not the credits. You're going to get a different credit based upon exactly where the SPY is trading the moment you place it. All you need to focus on are the expirations and the strike prices. Okay, so now we're going to reinvest a good chunk of that profit from the covered call into a put option. But first we need to sell the current put option we're already long. So we can sell to close the June 14, 2019 286 put option. We went into that for about 59 cents and now it's trading at 53. So we lost 5 cents on it. It was up considerably yesterday. And again, that's to help generate extra profits in a downturn. The next trade is to open that position back up in a similar setup, but a little further down on the strike since the S&P 500 has fallen about 1%, and then also to extend the duration. So now we're going out to June 17th. And again, our put option has a longer duration than our covered call. And that's because we want to sell the put option with at least half of its time premium still alive. And that way we'll get the maximum profit and protection during this period. Now, the other thing I've been focusing on is the deterioration in the put option writing to protect us from downside risks. For the past few weeks, we've been watching this have around 50,000 to 75,000 open interest in the put option writing market. Now it's down to 15,000. That means if there was a sudden sell-off, there won't be a whole lot of buying from the put option writers to support levels underneath us. So in other words, you better have your hedge in play because there's not a lot of support below us. And so we'll actually do very well if the market does start to get shaky and begin selling off. So to review one more time, we're going to roll over the covered call. We're going from the June 12th to the June 14th and moving the covered call strike from 287 up to 288. Then we're going to close out the last put option we purchased by selling it and buying a new one. So we're rolling the long put option from the June 14 286 strike down to the June 16th 284 strike. The net credit will be around $1. And if the market goes higher, we do great. If the market goes flat, we do well. If it goes down a little bit, we'll probably be around a break even like we did over the last period. But if we start to crash towards 284, that put option will grow in value exponentially. So again, if we do see the SPY starting to pull back, look for us to take profits on this covered call and roll the strike down lower, just like we did yesterday. This helps us basically make it very, very, very difficult for our portfolio to ever lose money, and continues to create additional profits from the speculators who want to bet that the SPY is going to fly to new all-time highs. Now later today we do have a webinar at 1 Eastern for our paid members only. If you're on a free trial, you won't have access to this webinar, but tomorrow we do have a webinar at the same time for potential clients. So if you're on a free trial and you want to ask some questions, talk to me directly, please look out for an email from Zoom tomorrow with your registration link. Now, when you do upgrade from a free trial, we're going to give you a 30-day pass into our high yield diamond program, which trades on Tuesdays. Currently it is exclusively trading Apple. If you like the income you can make from trading the SPY, wait till you see the covered call income you can make from Apple. It's phenomenal. And we're also going to give you a 30-day trial into our Whale Club. Now the Whale Club doesn't go for as aggressive of a return, but it does look for safe, consistent, high probable trades, or in other words, low-hanging fruit. Right now it's all in on Amazon and Google, and doing a very similar setup that you saw on the SPY, as well as what we're doing on the Apple. And that is we're selling a covered call for profits and short-term protection, and then we're taking part of that profit and buying a put option for extra downside reward. So if you want to try out those programs for 30 days, it's free when you upgrade your free trial on the basic program. So if you have any questions, please call Dean at 505-322-7515. He can save you $100 on your basic membership. Most people make the cost of our program in less than a week from just selling a few covered calls against the SPY. So the program does pay for itself very quickly. And more importantly, think about all the money we're going to save you if the stock market does crash. What are you going to do? Are you going to generate extra profits when Trump raises the tariffs? Or are you set to lose tens of thousands of dollars? Because you're not going to be totally exposed in our program. You're going to have that downside protection. You're going to follow the market daily with our 2 updates in the morning and evening, and you're going to know exactly what to do to profit and protect from a very risky 2019 stock market. So thanks again for your time. We've got the webinar coming up for paid members in about an hour and a half, and then we will have another update later this evening to review our positions. Now, if we do see the SPYs pulling back towards probably 286, expect us to take a huge profit on today's covered call, write a new covered call, and lower the strike. That way we can sleep safe at night and generate a double payday. So thanks again for your time, and I look forward to speaking to you soon.